For the first time in a very long time, it looks like there's some reports coming out that the housing market is actually expected to drop sometime in 2022. Now, this would be a complete flip on what we've actually seen over the last year and a half or so. The housing market has boomed like it never has before. And now it looks like investors and companies like CoreLogic are predicting the housing market will actually drop in 2022. They're looking at numbers that are coming out from Zillow right now. Zillow is a platform that allows users to be connected directly with real estate agents when finding a house. And over the last few years, Zillow actually started to change its business model and began purchasing houses. So Zillow would come to your house and buy it for market value and then sell it on their own site. This is a way to always ensure that they have homes to sell. But over the last few months or so, Zillow has began slowing down its home buying, and its stock has reflected that. At the start of this year, one share of Zillow was worth around $202, but right now, one share of Zillow would run you about $94. For the month of September, mortgage rates actually dropped, and only 28% of those homes that were bought were purchased by first-time homebuyers. This is the lowest number we've seen since 2015. So today I want to talk all about housing in America and if we are going to see another housing boom or a housing market crash. What is actually going on in the housing market and what is causing mortgage rates and Zillow to stop buying homes right now? And does all of this mean a big change for the housing market? So if you're in the market to buy a new home or a real estate investor, you might want to stick around till the very end of this video. But before we break all of that down, my name's Nate from Minority Mindset News, and if you like this video, make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. The last year and a half has been a crazy time for houses. We saw houses growing in value pretty consistently after the 2008 recession, but as of 2020, those values skyrocketed. And there's a lot of different reasons behind the sudden housing market spike. When the pandemic first began, a lot of people were out of work, and that meant the federal government stepped in and provided a ton of different stimulus for a lot of different people. We had additional unemployment assistance, and we had stimulus checks going out to just about everyone throughout the United States. When the federal government gives you free money, there is a few different things that you can do with it. One of the things that the federal government hopes you do with it is spend it. So when these stimulus checks came out in 2020, the federal government hoped that you went out and put that money back into the economy. So this would mean buying groceries, spending it on that new Gucci belt, or actually going out and buying a new car, or just pretty much anything. The point here is the federal government would like you to spend that check so that way that money goes back in circulation throughout the economy. That money will go back to businesses and hopefully the people that benefit those businesses. This is how our consumer and capitalist society works. The second thing you can do is save it. Nobody says that you have to go out and spend this stimulus money. You can actually save that money in a bank account or save it for something else that you want. And in 2020, we saw some of the highest saving rates that America has ever seen. Of course, the other thing you can do is invest this money. And we're a little impartial to investing over here, but the thing that I really want to focus on is what people did with saving this money. People saved for a variety of different things like an emergency fund, which is a great idea, by the way, but they also saved for the things that they want. So if they needed a new house, if they needed a new car or something else that was broken down, or just something that they wanted, they used this money to save up and then buy it. This led to millions of people being able to put down a pretty legitimate down payment for a house that they might not have been able to afford before. But that's not the only thing that the federal government did during this time. The Federal Reserve stepped in further and lowered its benchmark interest rates. This means that people could get into houses with an interest rate as low as 2.75%, which if you know anything about interest rates, that is a great deal. Before this time, in the mid-2000s, a good interest rate would be considered around the 4 to 7 range. So essentially, your interest rate for 2020 was cut in half. This led to an absolute housing boom. I mean, we saw houses go up for sale and be sold the same day. And because the housing market was so hot, a lot of these homes were being sold for way above market value. I'm talking $20,000 to $30,000 above asking. So 2020 was the year of home buying. and it was a great time to buy a home if you could find one. This lasted for around a year or so, but starting at the beginning of 2021, the housing market started to run into some serious problems. The first being that with so many people purchasing homes, there wasn't enough homes to go around. And the simple solution is just to build more homes. And throughout 2020 and early 2021, that's what a lot of people did. It was cheaper for a little while and a lot easier to build a home than to go out and find one. Homes were scarce and they were getting expensive. And because they were getting so expensive, the home that you were buying wasn't really valued at what you were buying at. The home was just suffering from market inflation. So people had the idea of building a house that was actually worth its value. And this went on for a pretty long time, but the problem is a lot of people thought of this. Materials to actually build a home began to skyrocket as well, and this led to a major labor shortage throughout the country. Materials to actually build a home began to skyrocket as well, and this led to a major lumber shortage and a massive price increase for lumber. It got so bad that by mid-May of this year, lumber hit an all-time high of around $1,670 per 1,000 board feet. That is almost 6 times higher than what it was valued at back in April of 2020 when everything sort of began. And lumber is a vital material when building a house. So building a house just because of lumber costs got super expensive. On the flip side, there were so many industries that closed for several months out of the year back in 2020 and even parts of 2021. That meant that some other materials that are vital when building houses could not be made, which means there was a big supply chain issue. People were being told that they'd have to wait several months longer just to build their home, and they'd have to pay more. So a lot of people turned away from that and stayed where they were at. So just the cost to build a house was rough. We also had rising inflation in pretty much every other industry throughout the country. So builders of these houses were not making enough money to meet their own standard of living, and thus were quitting their jobs. Not only was the building of new houses backed up because of supply chain issues and the actual cost, we didn't have enough people to build houses. And even as I'm recording this video, that problem is still going on. So building new homes was tough, but as soon as they hit the market, they began to sell. And the prices of new homes continued to just get higher and higher and higher throughout 2020 and even through the summer of 2021. But as of September of 2021, we've started to see a shift in the federal government's thinking. Reportedly, the US economy is beginning to improve, and in some aspects, fingers crossed, the pandemic is starting to go away. So the federal government has taken its foot a little bit off of the gas and started to pull back some of its unemployment and stimulus measures. That means no more free money for millions of people throughout the country. So people no longer have that access to put down extra money onto a house. The Federal Reserve has also talked about moving some of its benchmark interest rates slightly back up over the next couple of years, which means the Federal Reserve also believes that the economy is improving overall. This could be one of the reasons why we've begun to see mortgage rates begin to fall. If mortgage rates rise, then a lot of people will be unable to purchase a home. And in September, buying houses is still going pretty crazy, especially when we look at that number relative to what was going on in the beginning parts of 2020 and 2019. The big news for September, though, was a lot of people are turning to existing homes over brand new homes. The reason being is because the supply of homes is super low. And we've got some major supply chain problems and a labor shortage that's causing home building to be delayed. That's just pushing the price of existing homes way back up. But prices can only get so high. The true value of a home is whatever somebody's willing to pay for it. And if those prices get too high and nobody's willing to pay that high of price, then that house won't sell. And if it's not selling, then the price is ultimately going to have to lower. So as we see prices continue to rise, we're also going to see a lot of people exit the housing market because they're basically just being pushed out. They can't afford to buy a new house because all of the houses in their area are way too high. This, coupled with higher mortgage interest rates, could mean that the housing market could either return to normal or eventually crash. And to be honest with you, nobody really knows what direction the housing market is going to take. Not even me. But the important thing to remember when it comes to the housing market or just markets in general is this. Markets have cycles. You're going to see big booms and you're going to see crashes. Nobody really knows when those things are going to happen, so it's important to plan ahead and expect things to boom and then bust again. If you're looking to invest in real estate, do so when it makes financial sense for you. If you're looking to buy a home, do so when it makes financial sense for you. The point here is to prepare your finances accordingly, no matter what is going on right now. You have to look past tomorrow when it comes to your finances. And going back to the Zillow thing, they're pausing home buying because they have a massive labor shortage within their own market. They can't find enough people to buy and sell these homes for them. In addition, they just have way too much demand on their hands for people who are looking to purchase homes right now. So they've kind of slowed that down to lower operational costs and to lower its overhead. So always remember that nothing lasts forever. And whether the housing market crashes or has a boom 2.0, the housing market will always be around, and the housing market will always have its cycles. But now I want to hear from you on this issue. Do you think the housing market is going to crash in 2022, or do you think it's going to boom again? In addition, if you are a real estate investor or someone who's just looking to purchase a new home, what do you have your eye on and what are you hoping to see in 2022 when it comes to the housing market? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, don't forget to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.